Welcome to Jules Realty's Real Estate Roundtable. I'm your host, Lene Jones-Jules, broker of record for Jules Realty, your real estate boutique in Newark, New Jersey. Today, we're going to have a discussion with Tim Maxwell, mortgage banker with MLB Residential Lending, and we're talking about home renovation loans. This is a hot topic. I'm so excited to dig into this with Tim. So Tim, please get us started and introduce our guest today.
Yes, very good. But today we're going to talk about a very hot topic, as Lene had mentioned, renovation loan programs. And why is this such a hot topic? It's a hot topic because most lenders don't offer the program at all. Yet it offers you a tremendous opportunity to be able to buy a piece of property that maybe you could get at a really cheap price and get the money to fix it. We're going to give you the money to fix the house. Could you imagine that? Imagine walking out, seeing a house that you think might be a great piece of property, but it needs a lot of work, but you can get it at a great price. But we're going to give you the money to fix it and to make it look like it's brand new. So that's what this discussion is all about. And I have with us John Miner. Now, I asked John Miner to come on this video chat with us because John has been in this business for a long time. In fact, I think John has been, how long, John, you say you've been in the business? 23, 26, 25,
Six.
Probably 100 years. Yes. Well, it's extremely important in this industry that if you're going to use a HUD consultant, and I'm going to let John explain what a HUD consultant is, but if you're going to use a HUD consultant to get a piece of property that needs some repairs, you need to have someone with years of experience. You can't use a person that perhaps maybe have been around 4 or 5, even 10 years, because there's so much that goes into a construction of a piece of property. You need someone that knows the ins and outs. And I rely on John Miner heavily because he's proven himself to be extremely accurate with regards to his estimates. So we're going to let John introduce himself, but just so that you know, the reason that John is on this call is because if you're going to buy a house and it needs repairs, you have to call a professional in to look at the property and tell you exactly what's wrong with it and give you a written estimate of what the cost is going to be to fix it. John, tell us a little bit about yourself and the work that you do.
Well, yeah, John Miner is my name. I've been a consultant for actually not a century, but 26 years. My job in this instance is if you found this property that Tim is suggesting needs some work, but it can be extensive, it can be not a lot, but my job is to walk through the property with you, room by room if need be, determine anything that's required in terms of health and safety, broken windows, peeling paint, broken doors, flooring, tabulate all those things, including, because sometimes and many times the buyer has a wish list. New kitchen, renovate the bathroom, siding, things of that nature. So my job is to pile all this information, put it in a contract form, so to speak, price everything out, present it to the lender, Tim, and say, okay, this is what we're doing. This is what we're going to need dollar-wise. And those numbers are broken down into labor and material as best we can figure. And from that point on, we find a contractor, make sure the numbers work between he and myself, and the numbers work for the borrower. We close the loan and we begin work. My job after that is while work is being done, contractor needs to get paid for his work. He's made progress payments. So we'll come out, we'll take a look at what's in place, suggest a payment for that amount. We all sign off on it, myself, contractor, and borrower, submit that to the lender, and a check is sent out. That's the gist of it.
So let's think about what we've talked about so far. It's important for us to understand why you need to be interested in a renovation loan in the first place. Mm-hmm. Today, if you go out and you look at, and you're shopping for a home, you're going to find that every house that you look at, there's probably 10 or 20 people trying to buy the same house every time. And it's because that's the marketplace that we are operating in right now. There's not enough inventory, not enough houses to purchase, and too many buyers trying to buy a limited amount of inventory. So with the renovation loan program, what it does for you is it gives you the opportunity to be able to buy a house that most people would just not be interested in looking at. There'll be some houses out there that maybe if it was fixed up, it would sell in a snap. But because it's in bad shape, maybe it had a fire, perhaps maybe there was a water damage, or it might just be just a small house is too small to be reasonably that anyone would even want. Well, with the renovation loan program, and we're talking about the FHA 203K renovation loan program, and also the Fannie Mae's Homestyle renovation loan program. We offer both. So this gives you the opportunity to find that diamond in the rough, a really nice house that could be a nice house, but it might be in bad shape now. But imagine what it would look like if it was brand new. So let me just give you an example. I have a client who purchased a piece of property in Scotch Plains. And when she looked at the house was in very bad shape. It was rather small. I'm going to show you a picture of what it looked like. It was rather small, but she went in and totally renovated the house. She blew the walls out. She put a second story on top of the property. And what happens is when you find a piece of property like that, maybe it's not very attractive now, but if you could imagine us giving you the money to make it what you want it to be, you could have the home of your dreams right now and wind up getting a piece of property with tons of equity in it. Now, when I say tons of equity, I mean, that represents cash that you could actually have in your pocket if you were to sell the house. Here's an appraisal inspection on a piece of property. And let me just show you what the house looked like. So that's the house. And you might not think that this piece of property was a piece of, a home that maybe you would get excited about. But my borrower had the clear view vision to be able to see that if she took this house and rebuilt it, it's going to be spectacular and in a great neighborhood. And it's going to be worth a lot more than what she would have to have paid for it to purchase a home. So let's take a look and see what the house was contracted for. And we can show that. Hold on. The house, here it is. The house sold for, the sale price on the house was $315,000. You can see that right up there, right? That's the sale price. But look at what the house appraised for. So the appraiser went out. We had the appraiser go, and we wanted to know, well, what is the house going to be worth once the renovation is done? Look at the difference. The appraiser said, this house, with the repairs that John Miner actually, gave us the work write-up for the estimate, the repair estimate, the appraiser said, if we do the work that John Miner said is going to be done in this property, that the after repair value is going to be $592,000. So let's think about that for a second. So if we go, take your calculator out. I want to see who can, do the math on this. The house after repairs are done is going to be worth $592,000. The purchase price on the house, we said, was $315,000. So how much equity does this consumer have in this property? It's like $277,000 minus the cost for repairs. So what was the repair cost? So we could show the repair cost, and you could see this is what a work write-up looks like that John provides. It gives you detailed information about all the work that has to be done, broken down by materials and labors. So there's nothing left out. Material and labor for everything that needs to be done to bring this property up to code. And by the way, just so that we can be clear about this, when John Miner, the HUD consultant, goes out and inspects that property, he's not only going to tell you what's needed in order to bring the property up to code. No, he's going to do more than that. He's going to ask you what improvements or adjustments you would like to make in this property. So imagine again, you might need to do, let's say, X, Y, Z to the property in order to get it approved by the city. But maybe you want to do something else. In this case, our borrower said, let's put a second story on top of the house. And that's what she did. She put the second story on the top of the house. Now, she didn't have to do that in order to be able to make this work. but she put a second story on top of the house and made all sorts of improvements. And as a result, we're looking at $277,000 in possible equity minus the cost of repairs.
You know
So
what?
let's go back.
And
Yes.
I think this is a good point to make, that when a person is purchasing a house like this, they're still going to do their home inspection. So Mr. Minor is not going to be the home inspector. He is going to be doing. Can you just talk about that a little bit? The difference between having their home inspection and then having Mr. Minor's and his report. It's two different.
Yeah,
correct?
yes. Well, the interesting thing about the 203K renovation loan process is that you can have a separate home inspector to go with you through the property, but really it's not really needed, because the level of inspection that John does is going to be much more extensive than a home inspector. Now, the home inspector does something different, though, with the borrower. So the home inspector will spend a lot of time in the property showing you how the furnace works and the electrical systems and things like that. So sometimes it's nice to have that. But what happens with houses that are in really bad shape, you can't turn the heat on sometimes. So the home inspector can't show the consumer how to operate those systems, or maybe they can't do, and there's sometimes the houses are in such bad condition that really John's inspection report is going to give them everything that they need most of the time. So John.
Yeah, let me just say this. In the HUD's paperwork, HUD says they do recommend that you get a home inspector, but it is not required by them. And as I tell clients, when they say, well, I need a home inspector, I say, well, you can. I give them the same thing. HUD says, well, you can, but we don't require it. And I just say, well, you got two guys doing almost the same job. One you're going to use for your loan, the other you're not. So you're paying two payments for something that you're going to use and one that you're not going to use. Mm-hmm. I just want to bring that up. If someone's come along and say, do we need a home inspector? Well, not necessarily.
Right.
Now that's a good point, because the cost for a home inspector these days might run about what, Lene, maybe $300,000-$400,000?
$300 to $600, depending on the size of the home, I would say.
And right. Add in some other things like different kinds of inspections.
Right. That
the charge goes up.
Exactly.
Right. So the thing here is that it's nice to have a home inspector that can spend some time with you, and maybe that's another pair of eyes that they could have on a piece of property. So we're not discouraging the use of a home inspector in cases with renovation loans, but you are spending the same money twice.
You know what I mean, Tim? I don't mean to cut you off, but it's almost like if you're having an extensive work done versus maybe a few minor things that you want to do.
Exactly.
And that home inspector can kind of help break it down. So that we can, I guess, discuss that later as far as the extent to the amount of work.
Exactly. So if it's just some minor repairs in the piece of property that you're purchasing, I would absolutely say you should use a home inspector. But if the repairs are over $35,000, you're going to hire the HUD consultant anyway. And one of the things that John mentioned is that the results from the home inspections report, the lender never sees. We don't work with that at all. Mm-hmm. But John's report, our entire loan process is built on the numbers that he provides. So it is the HUD consultant's report is extremely important. Yeah. All right. So
go ahead. I'll shut up and let you keep talking. Go ahead.
No, that was a good question. I'm so glad you brought that up, because that's a question that people ask all the time. Should I get a home inspector? Mm-hmm. So, but the right answer will vary, like you mentioned, based on the condition of the property. Mm-hmm. Okay. Yeah. So we were looking at, we want to see, again, what the HUD consultants work write-up, totals out to be. So we can see, so we can get a better idea of what these numbers could really look like. Now, sometimes we'll do an inspection for you, and let's say the repairs are just 50 or 60,000 when it totals out, but perhaps it could be less. Now, we provide a loan program called the FHA 203K Limited Loan Program, right? It's a limited. It used to be referred to as a streamline FHA 203K, but and the reason that it's called streamline, or was called streamline, it's called limited now, is because it's for houses that need less than $35,000 worth of repairs. If you're buying a piece of property that maybe you only need to do some minor work, you don't really need to hire a HUD consultant to do it. So you could save some time and money that way. And it's if your contractor goes in and gives you an estimate and you're confident about it, then that's fine. But frankly, I always prefer using a HUD consultant, even when the repairs are less than $35,000, because sometimes we think you only need $35,000 worth of repairs because the contractor said that that's all you need. But John goes in and looks at it and says, oh no, you need a lot more. So if you really want to know the truth about a piece of property, a HUD consultant's services is extremely useful. Okay, so imagine for a second, though, we were talking about that one example. Let's take a look back at it one more so we can finish up this discussion. So let's say you can see the total here, the total amount of repairs here turned out to be quite a bit. So let's think about that again. So here we got a case where we had $277,000 worth of equity in the property, and we did $170,000 worth of repairs on that property. So you know that property is fantastic. It looks great. It's a great piece of property. In fact, my client was brilliant in the fact that she was able to see this property and recognize it for the diamond in the rough that it was. Well, guess what? If she had turned around and just put that property back on the market and sold it, she would have walked away with over $100,000 in cash equity. But again, this loan program is not designed to buy and flip properties. No, this loan program is designed for people who are purchasing a home and they want to live in it. But the point is that when she eventually does sell this home, and eventually she will, maybe, that $100,000 or so that she has built in to this property because she did it as a renovation loan will come back to her in cash. There's no other loan program that I know of that has the ability to enrich a borrower financially as well as the FHA 203K and the home style renovation loan programs. So
Tim, is there a limit that they have to stay in the property after they use one of these loans? That they have to stay there a certain amount of time before they can sell it? Do you have to stay a year or 2 years or?
Yeah, at closing, you can assign an occupancy agreement that says that you intend to move into the property within a certain number of days and that you're going to be there for 12 months. So that is what your occupancy certification says at closing.
Gotcha.
So, but imagine still, if she did it once a year, she could make $100,000 a year just buying a house, moving into it, living in it for a year, and then putting it back on the market, selling it. But again, we're not encouraging that either, right. But I'm just saying that technically it could happen that way.
Right. So what about people who are in their home? Are there loans available, renovation loans for people who are living in their home and they want to update it? Should they do a refinance or should they do a renovation loan?
That's also a very good question. And that comes up almost every day with my customers that are calling in, and they're in the house. Maybe we've done the mortgage for them. We put them in the home, and now they want to make some improvements to the property. Well, sometimes if you have enough equity in the home, you don't need a renovation loan. We could just give you cash out. We can give you the money that you need to fix the house, hire your contractor, and that's it. But let's say, for example, that you don't really have enough equity in the home right now. You don't have no cash to get out of it. But the amount of repairs that you're going to do to this property is going to greatly increase the value. The FHA 203K renovation loan is the best program to get for that purpose, because we will lend up to 110% of the appraised value of that property. It's an amazing program. Mm-hmm. So you can have a house that don't quite have enough equity in it, but take advantage of the FHA 203K program and gives you a little bit more money to work with to improve that property. And while we're on that topic, for purchase transactions, by the way, often, because of the way the market is being going, people tend to offer more for the property than what the house is really worth. Well, with a normal loan program, you're in trouble, because let's say that the house was worth $400,000, but you offered $410,000. Well, when the appraisal comes in at $400,000, your deal is dead. You're not going to get this house unless you can come up with that $10,000 difference. But with the FHA 203K program, we will allow you to purchase a home and pay more for the house than what it's actually worth. Again, we go back to that 110% number that we use here. So if you have a borrower, and this is especially important for realtors to know, if you have a borrower and they're trying to be real aggressive on the offer price on a particular piece of property, the FHA 203K program is the best way to go, because we will give them more flexibility in terms of what they could pay versus what the house is really worth. They'll be able to be more aggressive and not have to come out of their pocket for the difference. It's a great deal.
Okay, I have another question on this line. With the FHA 203K loan, is there a minimum or maximum amount that you can put down on a house? If you have a significant amount of money, should you put it down on the house or use that to repair the house? Or, but particularly with the 203K.
Well, here's the nice thing. With the FHA 203K program, you only need to put down 3.5% in most cases to buy a house, right? It's a 3.5% of the purchase price plus the repairs. And that's why it's such a popular product. You can buy a 2 or 3 family home, and it doesn't matter, 3.5% down is all you need to put down. It's really a nice program. So you don't need to put down any more than that. However, some people just want to put down more money and they can. So 3.5% is not a hard and fast rule. If you want to put down 5 or 10 or 20%, you're welcome to do so, but we don't require it.
So I'm working with some people now who are looking to purchase, and I've introduced them to the idea of getting a FHA 203K loan, and they are afraid. They said, "Oh, I've heard horror stories." But you have made this, I feel, palatable, because when you have the contractor, you have the consultant and the lender, there's a whole team of people working to get this property lived in, and you in the property. So can you talk a little bit about the relationship of how we all work together to get you into this home, and why this is such a good product to think about?
Yes. I'm glad you brought that up too, because that is important. It does appear to be a very stressful process. But as you mentioned, when we put together a 203K loan program for a consumer, they have all sorts of protections built in. So let me just give you an idea. I'm going to share my screen again. Take a quick look at the loan process, and you see it here. Basically, it's a lot of steps involved. The first step of the process is to get qualified. So before the borrower gets involved in any concern or any anxiety about, whether or not there's going to be any horror stories or not, they're going to spend some time with me, and we're going to spend as much time as needed to explain the whole process from beginning to end, so that they can know exactly what the requirements of the program are and what safeguards are built in. So, and as a result of this consultation that we're going to have to qualify them, they're going to have a good idea of just what to expect. And then, of course, the borrower goes out and they do the shopping with you. So you're going to take them around and you're going to show them a number of homes. Some of them might need some repairs. And at some point during the process, we're going to have John go to that property, take a look at it, even in a termite inspection report. And at the end, he's going to provide a work write-up. Now, that's the work write-up that you saw on my previous slide. But however, that work write-up that John provides is usually about 10 to 15 pages, sometimes 20 pages deep. He does an extremely thorough job of checking the house out to make sure that if there's any problems anywhere, that we all know about it. Because this loan program is structured so that the consumer won't get a house that's going to get them in trouble, right? And then, so John is going to make sure that that structurally that the house is going to be sound once the work is done. And he's going to tell the contractor everything that needs to be done. And then the contractor is going to have to agree to do it at that price. And that's the other cool part. Now, if you were to go out and shop for a contractor to get estimates on work to be done, you know, I'm not saying that they're going to try to line their pockets. They're not going to do that. At least we hope not. But John provides a safeguard in that he tells us what the market price for the particular repairs actually are to bring this property back up to code. In addition to that, he doesn't leave anything out. So one contractor might go in and take a look at a piece of property and say, oh, I could do this for $50,000. Yeah, you can, but did he include this? And did he include that? Did he include this, that, and the other? Well, John's job for us is to make sure that nothing was left out, that there's not going to be any surprises or gotchas at the end. We don't want the contractor saying to our client once the loan is approved and closed that, you wanted that done. No, that's going to be more money. No, we're not going to allow that. That will not happen. So we're not going to do that. So after John does his work, we send the work write-up along with the contractor's bid that shows that he's willing to do the work for that price. Now, that's the other nice part. So your contractor and the HUD consultant, John Miner, will have to agree on the work that has to be done. So between your contractor and the HUD consultant, you're going to have a real solid, reliable number. Then we send both of those reports to the appraiser. The appraiser at that point goes to the property. He examines the contractor bid. He examines the 203K HUD consultant's work write-up. And he says, okay, based on these repairs, this is the work that has to be done. And then all of that information, once the appraisal comes back, the appraiser tells us what the house is going to be worth. After repairs are done, he's going to examine the work write-up and the contractor bid as well himself. And by the way, if anything is missing, the appraiser says, no, we need to do this, that, and the other also. So the customer is protected multiple ways to make sure that nothing is left out. And then once the loan is approved, then your attorney and the other parties to the closing process will get together and work on that. See that beautiful home there? Started out looking like that. But then in the end, it's going to look like that. We hope, right? It depends on the amount of work that you want to get done. Now, sometimes I get a customer and they don't want to get any work done. But I say, if you're going to get a 203K renovation loan, do everything that you want right now. Get the home of your dream today. Don't wait for tomorrow to get it. So that's how the process works. So there's no reason for them to be concerned about the process. We're going to protect them through the process. We're going to make sure that if anything could go wrong, we know about it and they're going to be aware of it as well.
Excellent. Excellent. This is such a great discussion. I feel like we could have a part 2 because I have questions that have come in. And maybe you could touch on it briefly. What about heir property? Somebody who it's a family house. They maybe it's in a deceased person's name, and the house needs work, and maybe they want to live in it. Maybe they want to one day sell it, but it's a family house. Can this property, this type of loan work for a situation like that?
Listen, I'm glad that you brought that topic up because most people are not aware that if they have a piece of property like that belongs to the family, in many cases, we could put them in that home without any or very little money out of their pocket to purchase the property. We could actually finance the down payment in the mortgage. We can't do that on a normal transaction. But if, let's say, a person has a brother or someone or someone else who died, you said, a property that's been given, as a result of a situation like that. Well, in many cases, they could buy the property. And even if no one did die, if it's, let's say one family member wanted to sell a property to another family member, we could include the down payment and closing costs in the mortgage itself. So you can wind up purchasing that property with, very little out-of-pocket costs. And then in most cases like that, we would be depending on John Miner again, because John, with situations like that, often the property has been maybe vacant for a while, or maybe has deteriorated for some reason, or maybe older ones lived in the property and they just couldn't keep it up. Well, the young family members that's interested in taking over this property want to see John, because John will go in there and he will tell them what needs to be done to make the house look like it's brand new. And then we'll give them the money to do it.
That's I think that is very powerful information, because oftentimes I see people, it feels like they're giving away their legacies because maybe the house is overwhelming for them, or they have somebody offering them quick cash for their money, for their property, but there is opportunity there to reinvest in your own family, in your future, and your family's legacy. So that's something I think is really important. And I'm glad
it is. But just keep in mind that the purpose of the loan, again, is to occupy. So it's not for investors.
Right. Yes. But I'm just saying reinvest in that property. I in preparing for this show today, I mentioned last week that we were going to be talking about this, and I thought, and I shared with everyone what my great aunt had to do to purchase her house years ago in rural Louisiana. She was an educated woman, and she had to work as a maid to, do all kind of little other stuff in order for people to help her get this house. And when I hear stories like that, and I'm sure there are many stories like that, it really pains me when I see people kind of just take these houses for granted. So it's good to be able to know that there's opportunity out here. You can purchase your great auntie's house or something, keep it in the family. I don't know. That's my little shoebox I'm standing on. I'll step back. But I think it's so important to know that there are opportunities out here that people can take advantage of. So thank you for sharing that. Anything else we can talk about? Maybe we can extend this to another week. And if anyone has any questions, they can let us know and I can pass it along to you both.
Mm-hmm. Well, what you should know is that even though the FHA 203K renovation loan program is designed for people who are going to actually occupy the property, but we do have a renovation loan program. It's a conventional renovation loan that will allow investors to buy single family homes and renovate them. We'll give them money to do the renovation too. So it works similarly to the FHA 203K loan, and I'll be glad to talk about that on another call. But it is it's a great opportunity that many people just overlook. So it's I'd say definitely if you're an investor and you're buying single family homes, it might be a good idea for you to take a look at the renovation loans for single family homes for investors. It's great product. What I love about this business really is that you have an opportunity to share one of the most important milestones that a person achieves in their lifetime. My name is Tim Maxwell, and I am a multi-state licensed mortgage originator. I am also a branch manager with MLB Residential Lending. I found that it has been the most rewarding experience that I have ever had. I started in this business over 20 years ago. I had the idea that I wanted to be able to assist the average consumer obtaining the dream of home ownership. Purchasing a home is one of the most important financial decisions a person will make in his lifetime. I've been able to successfully assist thousands of consumers. We go out of our way to make sure that we match the right program with the right borrower. If we're successful at doing that, we will wind up with a very happy customer. Just recently, I had a customer who really needed to get his loan approved in the shortest possible time. We took his mortgage application on a Wednesday. We issued him a commitment the following Monday. The experience that you have in assisting a consumer in the home buying process is not something that is easily put into words, but it has an impact on your relationship with individuals for years to come. We have great rates. We have great programs. We offer an assortment of lending products. We offer all the FHA lending programs. We offer all the VA lending programs. We offer all the Fannie Mae programs, all the Freddie Mac programs. We have first-time homebuyer programs that will even assist a consumer with down payment money, with closing costs, with all sorts of things. If you're even thinking about purchasing a home, give me a call and let me see if we can assist you in making home ownership a reality for you. Yes, so I hope that was helpful. By the way, some people ask me, what does MLB stand for? Making lives better. That's what it stands for, making lives better. At MLB Residential Lending, we really are serious about that. So if you want to have a good experience, just give us a call. We have a great team that's working here to make these things happen for you. Give me a call and we will make your life better. We guarantee that your life will be better when you conclude your transaction with us than it was before we met you. That's our goal, to make sure that you're extremely happy and much better off. So I look forward to speaking with you again, Lene, and thank you for inviting us on this call.
Thank you so much. Thank you, Mr. Minor. And I hope you all have a wonderful weekend. Thank you for joining us. If you have additional questions, please DM me and I'll get them over to both of our guests here today. And I look forward to talking with you all very soon. Be blessed. Have a wonderful weekend.
Take care.
Thanks for watching. If you like this video and you want to see more like it, subscribe to Jules Realty Boutique on YouTube. Follow us on Instagram. And on Fridays around the noon hour, we have our Real Estate Roundtable live on Facebook. Great real estate tips every Friday around the noon hour. So connect with us. We look forward to connecting with you. It's Jules Realty Boutique. See ya.